Everyone, welcome to the channel. Today we are going to talk about home loans, right? Home loans is a very sensitive topic because people generally what they do is without thinking much in the pressure and influence of the family, we go and take a loan to purchase a house as soon as we get a job. It could be a big mistake, guys, and I'm going to tell you a few things that you should keep in mind before you take a home loan. Number one is interest rates, right? You should definitely factor in the interest rates that you are getting your loan at. Firstly, first figure out what is the prevailing interest rate in the market. Okay, then secondly, you should understand that banks do not give you a home loan at a fixed interest rate. Say for example, you go and take a home loan today, you will get it at say somewhere between 8.5% to 9%. This is not a fixed interest rate. If the interest rate rise, if the RBI says that interest rates will go up again by 0.25% or 0.5%, your home loan interest rates will also go up. Similarly, if RBI says that it will now come down, your home loan interest rates will also come down. So you have to beware that first you have to factor in what is the current cost of your loan, and then also understand what could be the future cost of loan if the interest rates were to rise by 2%. That is number one. Number two is down payment. How much down payment should you make, right? Down payment should be so much that your monthly EMIs do not exceed 20 to 30% of your net income after expenses, right? After your household expenses, whatever savings you are left with, ideally you should not your EMI should not be more than 30% of those savings. So that is something that you need to consider. Then one more thing you should consider is your down payment should be you should buy a house of such an amount wherein your other financial goals like retirement or like kids education do not get hampered, right? Generally what people do, they go and buy a house, but then they start planning for their retirement in their 40s and 50s. By that time it's too late. Then you can't really use the magic of compounding to work for you. You have to pump in a lot of your own capital to get there, right? Tax benefits, most people what they do is they save, they buy a house just to get tax benefit, but you have to understand what are the tax benefits on this and what is the limit and how much tax will you save on a on a yearly basis. So there are two types of tax benefits that you get. One is under section 80C for principal repayment. Okay, this this is the section 80C benefit you may not get also because because you may not be able to utilize also, because for a simple reason that if you and your employer are contributing to provident fund and that itself exceeds 1,50,000, then you will not get an extra benefit on this, right? And then there is section 24 which gives you additional 2 lakh rupees benefit on the interest payments. So the tax saving, if you are in the highest tax bracket at 30%, you will save somewhere between 60 to 70,000 rupees, which is 5,000 rupees per month only. So do not buy a house because you will save some taxes. That is the worst thing that you can do to your personal finances, right? So make sure that you don't do it. Then you should look at from which bank to take your loan, right? Because generally what happens is some banks like PSU banks will also reduce your interest rate on time if interest rates falls, but private banks you may have to follow up with them to reduce the interest rates. It has happened in the past and it could happen with you also, so be very careful. Then you should also look at insurance, right? When you go and take a home loan, generally what's going to happen is you will be sold an insurance. Insurance is a must when you buy a home loan, but it should be a term insurance, right? What they will do is they'll sell you an insurance which will be a reducing cover insurance. So as your home loan principal goes down, the cover on the insurance will come down, but you'll have to the premiums that you will sell out will be the same premium, okay? Or generally it will be higher only. What they will do is they'll ask you to buy a single premium policy. That way you end up paying a lot more versus what you could what you could pay when you buy a term insurance outside. So ideally what you should do is take a term insurance from an outsider and then assign that term insurance to your home loan, so that even after the home loan is over, your term insurance can continue and at a lower cost. And when you're taking a term insurance, make sure that your term insurance is at regular pay till your retirement age, right? And also you have to consider how much term insurance to take considering your net worth and other things. I've done a video on term insurance, sharing the link here. You can take a look at that if you want to understand term insurance in detail, right? Now lastly, how big should your house be, right? This is a very big consideration again, because we tend to go over budget, right? But what happens when you go over budget, your EMI will increase, right? If your EMI increases, then it will cause a very big stress on your finances. So you have to make sure that you stay within your limits. Okay, if you cannot afford, do not buy the house now, maybe buy it after 2 or 3 years later. Real estate prices do not go up as as the market, as you feel, right? So real estate prices are like stock markets. They will not, they are also cyclical. They will also go up in cycles only, and they generally don't go up at 15-20% every year, right? It cannot happen. Possibly, it's practically not possible, right? Then you should also consider, say, because why I'm telling you this is simple reason that if you buy a house today at 8%, 8.5% interest rate, and if interest rates increases by 2%, then your EMI will also increase, or your tenure will increase. Recently, what has happened, let me tell you with a live example. 2 years back, during COVID, when the interest rates were low, what people did, the home loans were available at 6.4%. Okay, so what people did, they went out and took home loans. Everybody took home loans. Everybody bought bigger houses, thinking that their jobs will continue as is, their incomes will continue to rise as is, and they'll be able, and interest rates will remain same. But they were mistaken, right? What happened? Actually, people ended up paying. Now, what happened, since interest rates increased, the banks have increased the tenure of the loan itself. So now, in some cases, a 20-year loan has become a 45-year loan. Until how long will you make the home loan payment, right? And if you increase the EMI now, your EMI will increase by so much that your income will not be able to take care of it, right? So this is happening. People are suffering. There are lots of articles around it floating in social media. So you should be very careful when you take a home loan. Do not overburden yourself. I also generally, it's okay to rent also, right? Buying a home, it was a fancy thing of the past, not anymore, right? Homes are not cheap. You should take a look at my other video where I did home loan versus buying a home versus renting a home. That will give you a very good perspective of how to think about buying a house, right? With that in mind, I think if you have any questions, or if you think that if there is anything that I missed, any consideration that I missed while taking a home loan, you should definitely comment and tell me. One more thing, if you are taking a home loan and if you are married, try to take that as a with jointly with your spouse, so that you can take the tax benefit twice, right? Because when you take the home loan with your spouse, you get the tax benefit. Both of you get the tax benefit, right? So that's why this is very important. Do let me know if you enjoyed this video. Do not forget